Welcome to the Deep Dive. Today, September 16th, 2025, we're not just scanning headlines. No, we're plunging into a stack of critical market analyses to understand what's really driving the crypto landscape right now. We've got reports that paint a picture of, well, cautious optimism. Bitcoin's hitting new all-time highs, sure, but there are also some pretty significant macroeconomic shadows looming.
Definitely.
Our mission today is to pull out the most important nuggets, the hidden connections, the subtle shifts, to get you properly informed on this crucial day.
So is the crypto market finally carving its own path, or are traditional macro forces still sort of pulling the strings?
Yeah, that's the big question, isn't it? And the answer, often in crypto, it's nuanced. We'll be connecting the dots between global financial policy, the often unsung heroes, which are stablecoins, and these new institutional gateways opening up for altcoins.
Right.
Understanding how these forces intertwine, that's really key to making sense of the current volatility and, frankly, where the opportunities lie. Absolutely. Let's unlock those insights together then and get you up to speed quickly and thoroughly.
Yeah.
Okay, first up, let's unpack this first big piece, the upcoming FOMC meeting. What does it mean for our crypto deep dive? There's a lot of anticipation around Chairman Powell's speech, especially with former President Trump publicly calling for a much larger than expected rate cut. It almost feels like a high-stakes poker game, doesn't it? Everyone's trying to read the Fed's hand.
It really does. And the crucial insight here isn't just that Fed policy, interest rates impacts liquidity and risk appetite. We kind of know lower rates generally favor riskier bets.
Sure.
What's truly insightful, I think, is how this particular rate cycle seems to be creating a divergence within crypto itself. We're seeing capital flow not just into Bitcoin, but specifically into yield-bearing DeFi protocols at a faster pace.
Oh, interesting.
It's almost like a shadow economy alternative to traditional bonds. That's a dynamic we haven't really seen to this degree before. It points to maybe more sophisticated investor behavior.
That is a fascinating distinction, but okay. Given Trump's very public calls for aggressive cuts, is there a risk the market is, overpricing this expectation? Could it leave us vulnerable if the Fed is less dovish than people think?
Oh, that's a very real concern. Absolutely. The market often front-runs expectations, right?
Right.
And if the FOMC meeting delivers a more hawkish tone, meaning, a more restrictive stance, maybe fewer rate cuts or a slower timeline than currently priced in, yeah, we could absolutely see a sharp correction.
Okay, so for the next, say, 24, 48 hours, what's the immediate market impact we should brace ourselves for?
Well, we're likely looking at significant volatility, both for Bitcoin, BTC, and Ethereum ETH as the meeting gets closer. Any signals for stronger than expected rate cuts, that could provide a strong tailwind, boosting prices.
And the flip side.
Conversely, a less accommodative stance, fewer cuts than hoped for, that could trigger a short-term sell-off, a real risk-off moment.
And altcoins. How do they fit in?
For altcoins, the impact will probably be uneven. Liquidity-sensitive areas like DeFi and GameFi, they thrive on easy money, so they could benefit a lot from positive sentiment.
Oh, yeah.
But smaller, more speculative projects, they might get hit disproportionately hard if the market reacts poorly. Capital tends to flee to perceived safety,
Right, the flight to quality, even within crypto. Stepping back a bit then, the longer-term picture. If we do get a sustained rate-cutting cycle, what does that look like for crypto overall?
From that broader perspective, a sustained rate-cutting cycle could create a very favorable environment. Potentially for a prolonged market rally, maybe extending the current bull cycle well into 2026.
Wow.
And this trend, it would also reinforce Bitcoin's narrative, wouldn't it? As a hedge against fiat depreciation, especially if inflation concerns pop up again globally, it sort of de-risks future returns by making traditional bonds less attractive.
So the Fed casts a long shadow, shaping that immediate risk appetite. But you mentioned another force, quieter perhaps, but foundational.
Right.
Stablecoins. You said they've been key to crypto's resilience, almost independent of central banks. What's a metric that really captures their maybe underappreciated power right now?
Well, something that might surprise a lot of people, even folks who follow this closely, stablecoin transaction volume in 2024. It's already surpassed Visa and MasterCard combined.
Get out, really, combined.
Combined, yeah. Think about that. Decentralized, permissionless transactions now outpacing two global payment giants.
Wow, that is genuinely astonishing. What do you think is driving that kind of just explosive growth? And, with that kind of scale, aren't we also looking at increased regulatory scrutiny? Could that stifle things particularly from bodies like the Bank of England with their proposed ownership limits?
Exactly. That's the crux of it. Why are they so crucial, and what are regulators worried about? They aren't just convenient, they are the bedrock, the foundational layer for the whole DeFi ecosystem, and a vital bridge between TradFi and crypto. They offer speed, transparency, often lower fees, but their future, yeah, it hinges on sensible regulation.
So what are we watching?
We're closely watching the Genius Act. That's a proposed landmark stablecoin framework being debated in the U.S. Senate. It aims to provide clarity.
Okay.
And yes, the industry's concerns about the Bank of England's proposed ownership limits are valid too. Crypto groups argue they're just unfeasible, potentially stifling growth by, ironically, centralizing control. Goes against the whole point, really.
So, okay, near term, how does this regulation talk play out for the market in the coming days?
Well, the direct impact on Bitcoin and Ether might not be immediate or huge just from these discussions, but positive news on the Genius Act. That could significantly boost overall market sentiment. Ethereum, in particular, could benefit indirectly just because of its central role in facilitating so many stablecoin operations and, well, most DeFi activity.
And other coins?
As for altcoins, projects deep in the DeFi sector, other smart contract platforms like Solana, Avalanche, they stand to gain the most from clearer stablecoin rules. It provides those stable, regulated rails for capital to flow in, you see.
Yeah, that makes sense. This seems to speak to a larger trend unfolding. Let's say the Genius Act passes. What would that really mean for the wider crypto world?
Oh, from a broader perspective, passing the Genius Act would be a massive bullish catalyst. Huge for the entire industry, especially DeFi.
Also?
It would pave the way for much broader adoption. Think retail payments, wholesale transactions. It legitimizes stablecoins as a mainstream financial tool. And maybe more importantly, it pushes the trend towards clear crypto-specific rules instead of just trying to jam crypto into old securities laws that don't quite fit.
Right.
It's a step towards acceptance, really, rather than resistance.
Okay, building on that theme of acceptance, let's talk institutions turning towards altcoins now. We've got the RX Osprey ETFs for Dogecoin, DOGE, and XRP launching September 18th. That's huge.
Right around the corner.
And Bitwise has filed an S1. That's their initial registration for an Avalanche, AVX ETF. Plus, we saw BlackRock's Ether ETF record impressive inflows after that recent dip. Shows real institutional engagement, doesn't it? It feels like the floodgates are creaking open beyond just BTC and ETH.
They really are. And the crucial insight here, I think, is why these new altcoin ETFs matter so much. They don't just add legitimacy points.
Oh.
They provide significantly easier access for traditional investors, people who've been maybe hesitant to deal with direct crypto buying or self-custody.
Good point.
This could draw substantial, sticky new capital into these specific ecosystems. It fundamentally alters their liquidity profiles, market depth. It's a clear signal that institutional players are moving beyond just Bitcoin as their only crypto exposure.
That is a powerful shift. So what are the immediate ripples we might see, perhaps even for Bitcoin's, long-standing dominance?
Yeah, you're right to ask about dominance. There could be an indirect impact on BTC and ETH, possibly even a slight dip in Bitcoin's dominance as institutional money diversifies into these big alts.
This makes sense.
DOGE, XRP, AVAX, they could certainly see more price volatility leading up to their ETF launches. Speculative interest builds up,
Sure.
And related sectors like meme coins, often seen as a proxy for retail sentiment and other layer ones, they might also see increased interest as investors maybe broaden their horizons beyond just the newly accessible ETF tokens.
Looking at the bigger picture then, the success of these altcoin ETFs, is this just the start of something much bigger?
Oh, I think absolutely. The success of these could truly open the door for even more products like them across a wider range of digital assets. This would dramatically diversify the crypto investment market, foster more competition between different blockchain ecosystems. It also signals a gradual but pretty undeniable shift. Regulators, once maybe hesitant, seem more open to crypto products beyond just Bitcoin and Ether. They're acknowledging the wider innovation happening. It's maturation really happening right before our eyes. So, okay. We've hit macroeconomics, stablecoin evolution, institutional gateways. What does this all mean for the market's pulse right now? Let's talk numbers. What are they telling us today, September 16th, 2025?
Right. Let's zoom in on the metrics and their implications. First, ETF flows. Bitcoin ETFs, they've seen a pretty robust $2.3 billion in inflows this month. That's helped BTC stabilize above that $115,000 mark.
Solid.
And BlackRock's ETH ETF also saw record inflows after a recent dip. Now, the importance here isn't just inflows are bullish, we know that.
Right.
It's that these inflows seem to suggest a shift, maybe from speculative beta plays towards more conviction-driven strategic allocations from bigger, more conservative institutions. This signals maybe longer-term buy-in, not just short-term trading.
That's a really crucial distinction, yeah. Okay, what about Bitcoin dominance, BTCD? Where are we today?
Bitcoin dominance, BTCD, is currently around 57.4%. It's showing signs of weakening slightly. What's insightful here is how this weaves into the broader story we've been discussing.
Well, many analysts see this not just as capital leaving Bitcoin, but as a signal that an alt season, that period where altcoins really outperform Bitcoin, might be starting. Driven in part by those very altcoin ETF inflows we just talked about.
That connects.
Exactly. A drop in BTCD typically suggests investors are moving capital from Bitcoin into higher risk alts, actively seeking bigger returns now that institutional rails are opening up for some of them. It feels like a calculated rotation, not just a panic sell-off of BTC.
Okay, interesting. And finally, let's check the sentiment gauge.
Yeah.
The Fear and Greed Index. Where's that sitting?
The Fear and Greed Index is currently at 52. That's categorized as neutral. It's dipped a tiny bit from 53 yesterday, but it's up from 48 last week.
So balanced.
Pretty much. A neutral state suggests the market isn't overly euphoric or excessively fearful, which is actually quite interesting. It implies the market isn't emotionally stretched thin in either direction. It's almost like it's holding its breath, poised for potentially a significant move depending on these upcoming catalysts, like the FOMC meeting, like the quiet before a potential storm, or maybe just a sudden shift in the wind.
Okay, given all these moving parts, the macro pressure, the stablecoin foundation, those new institutional paths for alts, and these fascinating metrics, what should you listening be thinking about for the next 24 to 48 hours? Seems like the market could trade sideways, but with bumps, waiting for the FOMC. Two main possibilities, maybe? Two forks in the road.
Indeed. And how you approach those forks is key. Now, obviously, this isn't financial advice, just looking at general risk management ideas. But the first thing is increased volatility.
Right.
Be prepared for sharp swings around major news, especially the FOMC announcement. Thinking about stop-loss orders, maybe reducing position sizes. It can help mitigate risk. It's like buckling up for a potentially bumpy ride.
Sensible.
Yeah.
And beyond just watching the price chart second by second.
Secondly, follow broader trends. Instead of hyper-focusing on just one coin, it's probably wise to watch the bigger picture. Institutional adoption, regulatory news like that Genius Act, and where capital is flowing between ecosystems like DeFi and Layer 1s.
Okay.
Think of it like scanning the horizon for the next big wave, not just staring at the ripples by your feet. And lastly, consider correlation.
The link to traditional markets.
Exactly. The crypto market still has a high correlation with TradFi, especially when macro is unstable. Keeping an eye on indicators like the DXY, the US dollar index, and the S&P 500 can give you crucial extra context, a wider lens on overall market health.
Okay, really helpful context. Now, looking specifically at tomorrow, September 17th, what are the absolute must-watches? What should our listeners have pinned to their screen?
Number one, without a doubt, the FOMC outcome and Chairman Powell's speech. The rate decision, the tone of his speech, the economic projections that come with it, they'll collectively set the short-term market mood.
Anything specific within that?
Pay close attention to the dot plot. That visually shows where individual Fed members see rates going long-term. It can signal their thinking for the next few years, not just the next few months.
Got it.
And look, we'd advise extreme caution with high leverage around this, before and immediately after the news. The potential for sudden, violent price swings that can liquidate positions, it's very real.
Definitely noted.
Yeah.
And a close second on the watch list, those altcoin ETFs.
Yes, keep a very close eye on the market reaction to the DOGE and XRP ETF launches. They officially go live on September 18th, but the reaction starts now. Watch trading volume, watch social media chatter for these two.
What are we looking for?
Well, you might see speculative price run-ups leading into the launch day, fueled by hype. But there's also a significant risk of a sell the news event right after.
The classic pattern.
Exactly, where the hype fades and reality bites. It's always, always wise to evaluate projects on their fundamentals, their long-term utility, not just chase news-driven pumps. It's like buying a concert ticket without knowing if the band can actually play,
Good analogy. Okay.
So if we try and tie this all together, today's deep dive, it really reveals a crypto market that's sort of teetering, isn't it? On the edge of potentially significant shifts, driven by macro, evolving regulation, and that ever-increasing institutional hug.
Hmm.
The core understanding, I think, is that these elements aren't in silos. They're deeply interconnected, constantly shaping both the short-term chop and the profound long-term trends. It's less about single events, more about the intricate dance between them all.
So connecting that back,
Mhm.
what does this all mean for you, the listener? As we navigate these, frankly, exciting but also volatile times, the question isn't just what happens next in the market. It's maybe how you choose to understand and respond to these seismic shifts in the financial landscape.
Yeah.
We've talked about yield-bearing DeFi, strategic institutional money, potential altcoin dominance shifts.
Hmm.
What aspect of this deep dive will you explore further in your own research? Will you dig into the specifics of DeFi yields? Or maybe analyze which altcoins seem truly built for that long-term institutional adoption we discussed?
Good questions to ponder.
We really hope this deep dive has armed you with the essential knowledge to do just that, and hopefully a lot more.